So
What
yeah,
other sectors are you seeing right now that you're looking at and watching?
I think I'll just quickly go through some ETFs because I have a
Mhm.
few ETFs that is very squeezed up, very long term. So please let me show you here. Let me quickly I will do the Brazilian ETF first.
Yeah,
Yes, Brazilian,
it's
just that's who cares about Brazil, right? But have a look at this long term. It's a 20, let's call it 25-year long pattern. And as just like everything else, it had a major melt up or bull market heading into the global financial crisis. And ever since, you
yep.
can see we have been making a very, very, very big squeeze coming all the way down, right? And to me, this is just waiting to break out. And
Mhm.
this shows to me that there are way better opportunities in other markets like Brazil compared to the US, for example, which is very uh, highly valuated right now, as we looked at on the Nasdaq. So a breakout here would kick off a long-term, very long-term bull market for the Brazilian ETF, which in like over the next 10 to 15 years we can actually go all the way up to the highs here. Similar to what you see on the Japanese Nikkei, actually, we are close to the highs again, but it took 30 years.
Do you,
So
do you think do you think we could go even more than that? Do you think like that could be the first wave is from 2000 to 2008? We had a consolidation and ABC correction, and do you think we could go into a wave three that's even larger than what most people think and can imagine?
I think that I do think that it will have a big pause when we're getting up to this level here. So I think if we were to get all the way up here in like 10 years or so, we will do some sort of if we were to go higher, we will have a big consolidation for like 3 years, 4 years, whatever, depending on how long time it takes. Um, but we could go higher, yes. But if I remember correctly, the emerging markets like Brazil and so on, I think when they get going, it's because the dollar is getting weaker. And correct me if I'm wrong, but I think that's a big um, view on things. So I think if we break out here, that should mean
Mhm.
that the overall dollar should be in for a rough time. So
Yeah. And what I've seen the last bull market is we tighten rates at a faster pace than everyone else in the beginning, and then we pause, and everyone else tightens rates after us.
yes, we
And
did
that's
that
where the
again.
dollar gets weaker.
Yeah, we had the
Yeah.
European Central Bank this week as well raise
Yep.
0.25. So and you
Yep.
paused. So or US they paused. Yeah. So I
And
totally
you'll
agree.
see the dollar
Yeah,
start to go down. The
I think
DXY at least.
the DXY. Yeah, I think it
The
tanked
index.
1% on that day, which is a big move in forex.
Yes.
1% is just huge amount of money leaving the dollar.
Yes.
So yeah. Okay, let me just quickly go further on here. Actually, the overall energy sector. Um, let me go to the daily here. So this is actually the only two things that I have been looking at for now. And I
Mhm.
started to, as many people, getting very bearish here when we broke down. But as you can see, we are back into the squeeze again, very bullish. And obviously, often, well, not often, well, sometimes when you get into the apex of a squeeze, you you will see a lot of jitter, meaning you have false breakouts to the upside or the downside, because the bulls and the bears are just fighting each other all the time because we are at
Mhm.
equilibrium. So I think this is a false breakdown to the downside. Obviously, we have to getting the breakout to the upside first to confirm it, but I think that's what we are seeing right now.
And if we think that XLE or XOP or all these different mutual funds, if you think they're pretty strong, do you think that oil is going to get that last false breakdown, or do you think oil is going to work its way on higher if we see these guys starting to get accumulated and move on up?
Yeah, I think often you can start to look at especially XOP, which is a oil and gas ETF, and that's typically where the speculative money goes first before you see the real move. Same as for silver miners against gold. So if you start to see a
Mhm.
big move in the minus when gold does nothing, obviously often that is a very bullish take, and gold usually give it like a week or 2 or 4 weeks after it will join the party. Um, but as you can see, XOP right now has broken a big downtrend here, coming back to to 2022. So this right here looks really good. The breakout and the back test, and now we are hopefully going higher. So maybe we don't get that spike down in oil. But yeah, we will have to wait and see.
We'll get a spike up in oil, right?
Yeah, could be. And also look at this. Look at this. This is this one here. It's as a chartist, you know, this is where you make money. Actually, this is where you make money. Looking at the long term, and you have a short term that looks good. I mean, you can set some pretty good risk reward here. Let me show you. This is the measured move for XOP at around, let's call it 300, and you have the breakout of this squeeze here. So if you were to play it as a trade, you have the squeeze here.
Well, I thought you did everything on logarithmic now.
Oh, it's because we were in a there it is. But yeah, the output is the same. It was because I showed the Brazilian one, I switched to nominal. But yeah, exactly.
Because I know if you consider that a head and you go to the bottom of the head to the neckline and you project that up, that's going to be gigantic.
It is, and this is the nominal one. You know, the exact the number. But
yep.
So let's just keep that as a first target if you were to say that we are going higher. So let me just quickly find a long position here. So you can actually take a very good trade, and then I will zoom in for you guys so you can see it more clearly. This right here is a really good risk reward trade that you can do. We have the breakout, we have the retest, and if you think that this is going higher, you can place your stop below these lows here, and you have the target up here. So you're looking at a, what is it? Where was it? Oh, there it is. You can see a risk reward of why can't I find it? There it is, 12. So you only need to be correct, you know, 1 out of 12 times in order to break even. So it's a great setup if anyone wants. Yeah.
I'm riding it from 2020 still.
Oh yeah, that's amazing. If you have bought the 2020 lows, that's just
well, not the low. I got it in October, November, December.
Okay, you got the
right in that bottom there, yeah.
Yeah, that's nice. Awesome. That's a great entry.
Really and I know a lot of people are giving me crap for riding it. I'm like, this is an inverted head and shoulders, which you can see on other individual companies too. And some of them are just massive. Like they are huge.
Yeah. Yeah, it is. And also the target, as you can see,
is coming.
Yeah, it is. It is. We haven't sold anything. So yeah.
Oh, sorry. On a logarithmic basis, what's the projection on this thing? Because wouldn't it, I mean, on your opinion here.
Yeah, let's do some chart porn. Let's do that.
Yeah.
Let's just for the viewers see if again this is just we are playing with numbers, right? So if we were to get the full move of this bad boy right here, let me just align it up somewhat easily quickly here. So instead of 300, you're looking at 1,000. If we were to get this full move
here. 10-bagger.
Yeah, it is. But that's not going to happen tomorrow. You will.
I know.
Be you know late this decade.
Late 2020s.
Yeah, exactly. Yeah, 2020s. Yeah, late 2020s. Yeah, for sure.
Yep, late 2020s, early 2030s. Yep.
But we will get a big pause at this high here because we have the high over here as well. As you can see, they're almost aligned up. So, but anyways, it's fun to do these projections and to see if they hold up. So yeah. But again, we have to break the neckline first in order to have, okay, this could be it. So we're still early. We're still working on the right shoulder, as you can see. Okay. Then we have the neckline. So there's a long way to go. It's a long way to go. But yeah. Let me just, okay. Any questions regarding this? I know you love oil, so just let me know if you have any good questions.
I love the oil.
Yeah.
I absolutely love the companies too, because they're all cash flow rich. They're cheap, very low risk. And you've got patterns that are just massive on these. Yeah. And it's just like, let's let this thing, when it rips, guys, I mean, if you see this rip, I'll be happy. I'll be happy. I'll just say that.
Even if you only go to the nominal high, I mean,
yeah.
I mean, that's just that's a very good.
I'll be happy.
Yeah, exactly. So yeah.
So what about what other stuff in the energy sector? I see you got TAN there, and that thing looks ridiculous too.
Yeah, it does. Similar to what we just looked at on XOP, but on a larger. I think it's the same time frame. Just look at this squeeze here from the 2020. Just absolutely amazing setup in my view. Let me just quickly draw for you guys. We have the low here, the COVID low, and then we just made a big pull, consolidation, similar to the lithium, to the uranium sector. I mean, this one begs to break out to the upside in my view. But again, we have to wait for confirmation and all that, but it looks really, really good. And remember, every government in the world right now is just blasting money into solar. Right or wrong? I think it's wrong, but anyways, that's a different discussion. So yeah, money is gonna come pouring in. It is.
What's the projected move on this guy? Because this thing looks massive.
Yeah, it is. As you can see, similar to the XOP, we have a big inverted head and shoulders going back, I don't know, 15 years. And we can do similar things. We can take the pole. Let's just take the pole here from this move up to the lows. We have the alignment is perfect, as you can see. Perfect alignment for the high here in 08.
Yep.
So that's a what is that? That's from here. It's a 3.5x from here for this move up. And then you can do different things with measuring the low of the head to the neckline and so on. But I think this move right makes sense. Going back to the all-time high here, it's a perfect alignment. It really is. I haven't noticed this before until I did it. So that looks really good. That looks really, really good.
It also doubles as a smiley face.
Yeah, it does. Yeah, true. It's a nice. I'm very good at drawing, as you can see. I'm just.
No, I
I'm
like
amazing. Like that. So, but again, we have to break out. We have to get through the neckline. So there's a lot of resistance coming on the way up, but it looks really, really good.
Well,
Yeah.
it kind of fell off of a cliff when it came down. So I think it'll come up to that blue line, maybe pause there, and then it can rip it all the way to 300 from wherever that line is.
Yeah, exactly.
Yeah, there's not much resistance between it.
No. As you can see here, this zone here, if you were to do a, what is it, volume cloud, I think I can't remember the exact, but this zone right here, there are no sellers and no buyers, more or less. It's just one big swoop. So this could go very quickly, all the way up to 220. So that, yeah, that's a very good point. Very good point. Okay, so 10 looks good. I mean, if you can get the breakout, obviously. So.
Yeah, and you said something about financials or banks looking pretty garbage. I want to talk about that too.
they could look really bad very quickly. Let me show you. Let me just quickly remove all these shorter terms here just to draw a picture. This is the high back in 08, 07, 08. Then we had the big banking crisis, obviously. And then we have come back up to the exact same level again. Then we had COVID. Funny enough, how the repo crisis and COVID just suddenly came along within like 6 months. But again, that's a different take. And then we have the big drop here, and then we came back above. And now we're sitting on top of this white long-term trend line. Let's zoom in here just to look at what we could possibly see in the short term if we are bullish or bearish. I would say that right now it's actually the banking sector is struggling right now to get some momentum up from this white trend line here. And why, you may say, is because this right here was a bearish setup. As you know, a squeeze to the upside is obviously is often bearish. We came all the way down again to the white resistance support this time around, and now we are in a bear flag, in my view. So if this doesn't get negated, getting above the upper trend line, then we are going to break down. And you as a chartist knows that if we break such a long-term trend line here again, this is basically the back test, right? So the back test is not holding, then we are going much lower in the banking sector.
So if we go much lower in the banking sector, do you think this will have an impact on all the other commodity stocks and all the other sectors that we were just looking at that look bullish?
I think for the past, what is it, like 4 months or so, we have had many banks go under, and gold absolutely ripped it from there. So that will mean if we will get a scenario where we'll break down here, gold should rip, and as you know, gold will lead, and then everything else should follow. Platinum, all that good stuff will follow afterwards. So yeah.
So we could go lower with commodities going up.
Yes, exactly.
That's
But initially,
possible.
you could get, you know, some spike lows because everyone is afraid, as you know. So all the leverage has to get out of the system at that point before you can go higher. So, but yeah, long term, that would be very bullish for commodities.
I gotcha.
Yeah.
I gotcha. Do you ever look at like bonds or anything like that much?
Yeah.
Like
Yeah,
what are
we can
your
go.
what do you think about interest rates and bonds? Because I know a lot of these things are also priced off of, at least my opinion is their markets are all priced or a derivative of interest rates.
Yeah,
And
for
I know
sure.
I didn't ask you about interest rates, but
Now we can
get your
take a look for sure, but I
opinions
can't
there.
find it. Just let me just we can take a look.
Yeah, TLT is the bond
Yeah,
prices.
I have some skadoodles here or some doodles here on this
Mhm.
one here. So yeah, let's just quick recap. This was the COVID. In my view, this is where the entire 40-year uh, what's it called monetary system broke down. You know, bonds broke down here in this big blow off here, and uh, and then we came in a downtrend all the way down, as you can see, broke down also from the orange support, broke down, retest again. The retest we often get these retests, and then completely a move down here. And in the short term, right now, we are in a, let's call it a flag. It is a flag. It's just a bit wide, but anyways, it is a flag right now that we are in. And I think if we were to get some fear into the markets, and that could push rates down, and obviously the TLT could push up. And I think we could get a move all the way up to the lower side of this long-term trend line here. But that will be it for me. That then we will roll over and be in for much more pain overall, you know, as a society. Um,
Mhm.
so yeah, there could be some in the, let's call it the next year or two, we could see lower rates and everyone will be happy, you know, inflation gone, blah 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 blah, and then we will get the big punch in the face. So yeah,
So here's another question though, with the rates going down, if that were to happen, how would that impact our commodities? Because the way that I've always viewed it is that's kind of, gold's going to rocket during that time frame.
yeah.
Because when rates go down, generally the yield curve uninverts and stuff like that. Do you think we're going to have to wait through that uninversion of the yield curve for a lot of these different commodities, or do the charts right now look so strong that we could have lowering interest rates and commodities take off together? But how often have we seen that in history? I mean, that's kind of what I've been like mulling over to some extent.
Yeah, that's true. But I think, you know, I think the lowering interest rates will be when the central bank is starting to cut rates.
Mm.
And at that point, I think the inflation will still be high. So they're cutting rates while inflation is high. So you get, you know, the difference between the two is often, if the bigger the gap, the better for gold. So I
Yep.
think that's where we are taking us. Again, short term, it could push gold down because everyone is scared. But you know, the bigger the gap, and that's when gold is taking off. Just like as we saw back in the 70s, that's were quite similar.
Okay.
We had high rates, but the inflation were higher. So even though we had, you know, like let's call it 10% rates, but the inflation were 18. I mean, that's where gold and silver and all that good stuff, platinum, just shines. I can't remember the exact English word for it, but I guess you know. But
Real negative rates or
yeah, exactly, exactly. Yes, true,
negative
true,
rates.
true.
Yep.
Yeah. So we could be in for a scenario in similar to what we saw 40 years ago or 50 years ago. Yes.
Okay. Okay. And what do you think about like inflation as well? I mean, we've got inflation in terms of percent growth is slowing down. The interest, the interest rate or the growth that is occurring. Do you think that slowing is going to continue? Do you think it's going to speed up? And what kind of impact do you think that's going to have? And you can use interest rates, you can use whatever you want to justify whatever. But
Yeah. I will I will use the, what is this? The 10-year, which is the benchmark, as you know, for
Mhm.
every. So just to show you guys, I'm gonna go to the monthly. Funny enough, this was the period where gold really took off. Let me show you from here somewhere to here, right? This is where gold
Yep.
took off. Meanwhile, where we had rates going up, and people say that can happen. It can happen if the real rates are in favor of gold. It can happen. So after that, we had 40 years of just declining rates, all the way down until we had this major blow off to the downside, and that's the COVID low, as we talked about. That's where this whole system right here just broke, and now we have broken out to the upside, and we are sitting on top in a bull flag. So for the next 10 years or so, we will have, according to the chart here, we will have higher rates. We will higher rates, but also higher inflation. So so we have to. How can I say that? Yeah, we've had 40 years of rates going down. Now we will have a period where they're going up, returning to mean, or whatever you want to call it. So yeah.
Do you think we're going to do a retest of that breakout?
I think we have already had it actually.
Already had it?
But we could dip down again for sure, because if rates are going down, this will go down as well. So we could see a where is my drawing pen? We could see a move down here again for sure, down to like 2.5 roughly in that area. So so yeah, it's a different it's a new world we're living in the monetary system, and they will come up with something new for us, like they did in when they took us off the gold standard. That was the kickstart of that system, and now 50 years later we need a new one. We have these periods. I don't know if it's a 50 or 40 year, but every 50 year you will get a new system put in place. So yeah. So the people that are waiting to refinance their house at a lower rate, I mean, they have maybe one opportunity left, and then that's it. So, and before you could do it every every 3-4 years, you can just refinance. Those days are over. So
now we're on the increasing stair-stepping pattern.
Yes, exactly. Yeah, true.
Yeah.
True. So
okay,
tough times. Yeah.
Yeah. Do you have anything else that you'd like to share, or anything that you'd like to talk about?
One last thing, because I know you like gas, and you did comment on this one as well on Twitter, so thank you for that. But this is the uranium spot price divided by nat gas. So if this ratio goes up, that favors uranium spot, and if it goes down, it favors nat gas. And we just looked at previously that nat gas could rip like 30-40%. To me, it's also setting up for that right now here with this big weekly candle right here. So I think we can go all the way down to where nat gas will outperform the spot price with 40%, which is a perfect alignment also with the 36% that we measured before. So yeah, nat gas looks good in the short term. It really does.
I agree with that. Nat gas doesn't look too bad.
No, it doesn't.
And a lot of people are pretty, I don't know. I've been a buyer, disclose, I've been buying a little bit, not recently, but before, just because the ratios were so high.
Yeah, exactly.
And everybody hates it. So I'm like, dip in a little bit, screw it.
Exactly. Yeah.
So.
And just to say, this doesn't mean that uranium spot price will go down. I mean, they can both go up, obviously, but nat gas will outperform to the upside. So.
Now, I probably should ask this, because I do have a lot of viewers that are interested in this. We haven't really talked a lot about gold, silver, and platinum. Do you have any comments around those? I really should cover those, because I know a lot of people do talk about this, so they love the metals.
We can quickly go through them actually. Okay, I'm just going to go a bit more short term. I have a lot of doodles here. This is what I have been drawing for the past, 2 months? Yeah, roughly. So we had this is the 8-hourly. So this is not the weekly anymore. This is the 8-hourly. So we had the $26 high, which to me, by the way, is when we break $26, that's where we go. I know many people say 28, but personally, 26 will do it for me. So we're not that close, actually, only $2 away. Anyways, this is the inverted head and shoulders. I was very happy to see the breakout here, because the measured move is just below 26. But then obviously we had a dip below again here. And what is important to note is that we barely held. As you can see here. Did we spike below? Yeah, but we just actually tagged the left shoulder low, which is very important that we held there. And then we spiked back up again. And now we're above the neckline. We can go to the 1-hourly and see this is the structure that I'm looking at. A big move here. And this was the tag of the right shoulder low. and now we need to take out 24.2. So silver is still doing, it still has a lot of work to do, don't get me wrong, but last week's raise from the ECB compared to the US is pausing actually kicked this off to the upside again. So short term, it's looking good again, in my view. But the 26 level, let me zoom out for you guys, is where it all happens. This is the silver squeeze high. I will negate that because, yeah, this was just news and FOMO. But as you can see, the $26 silver is, in my view, what you should be looking at.
Mm-hmm.
And again, you have it here, all the way here, right? So 26.
And what about like a really big long-term view?
Yeah, sure. We can do that. Again, silver to me is also, I love silver, I really do. But I think you need to have a lot more patience in silver compared to other markets, even though it's the setup for silver is just insanely good. Let me just clear these, get rid of these bad boys over here.
Mm-hmm.
I know many people have seen this before. This is a big cup and handle, one of the strongest patterns that you will ever see. And we have the cup and we have a handle. So that's very, very bullish. And it will resolve to the upside. It has to, in my view, because gold will go higher and silver will follow. So you just need patience. And
for that handle, if we break 26, does it also break the top of the handle?
yes, it does. Exactly. That's exactly what it's doing, as you can see there.
Yep.
So that's why 26 to me is just the level to look for, short term, mid-term, long term.
So that's a big boy move.
That's a
we
big
break
move,
26. Here we go.
Yeah, because the move in on the nominal scale, on the nominal is like $50. So you will get 50 plus 50, that's 100 if you were to do that measured move. But if you were to do a bit of a, we've done this before, but let's do it again. We do the percentage move, which is actually a lot bigger.
Yep, unlock.
Yeah, I think it gets to like 600 or so. Yeah, 600, 700. But still, that's way into the future, like in like 15 years or so, maybe. But yeah, I mean, silver just looks really good if and when we break 26. That's my statement, right here, right now. So
now, this is a difficult question. What do you think will outperform in this bull market? Silver or platinum?
I know where you're going. Yeah.
Even with a move like that.
Yeah. I mean, I know the exact how the chart looks in my head, but if you take the platinum to a silver ratio, platinum is just way underperforming. I can't remember exactly, but I think it's 3x from the highs back in 2011 or 2010. So if we were to get a big move in silver, you could actually see platinum do even better. And those numbers I will not put up here, but they are very large. So they are very big. I'm not going to say that we are getting there, but from a ratio perspective, if we get this kind of move for silver, you have a potential of platinum doing some amazing things, just like palladium did, for the past, I don't know, 10 years or so. They did like from like 200 to 4,000 or so. I can't remember, but they did a 20x. So a 20 and the 20x for platinum will be 20K, just to give a quick calculation. So yeah, it really could do some amazing things.
So we've got these setups. We've got them across the board. We've got oil, we've got uranium, we've got, silver here and gold. What exactly are these things signaling in our future? I mean, if these actually play out, what does our future look like? I mean,
in my view, yeah, just what we looked at before, the rates, higher inflation. Higher inflation.
Yep.
That's all. That's all for me that this is pointing to.
And
so
the rates also,
yeah. So it's all higher inflation, and we have had like 2% according to the numbers, 2% for the past 20, 30 years inflation. We will see triple that, on average for the next 10, 15 years easily, according to their numbers. But I know when I shop at my local store, food has gone up like 50%, 60%. And that's not 6% per year. That's more like 20, 30% per year. So yeah.
Our food has gone up more than that on a lot of our stuff.
Yeah, okay.
Like
okay.
eggs did like a a rocket, and they haven't
Yeah.
really seen them come down that much in the store, at least.
No, I know the chart has suggested that they
I
have come
know.
down like 50%, but in the stores, yeah, that's a different take as always.
Yeah.
So yeah, yeah,
Meat has gone like massively higher. It's like, oh my goodness, that's like,
yeah,
yeah, not maybe not all of it, but a lot of it's gone up a lot. Just say
yeah,
that.
yeah. Milk and meat and so on has easily doubled up, for the past 2 years, easily here in Denmark. So we're seeing a pause right now, but that's just a temporary thing, and everyone will celebrate. Inflation is gone. Blah 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 blah. It will be higher again.
Coming back, I like how you say that with such confidence. You're like,
Yeah,
it will be higher.
uh, it will be. I mean, that's you are an engineer and I'm an engineer. I'm just
Yeah.
trying to look at data, and to me, it's just pointing to higher inflation.
Now, is
So
there anything that you see in the markets that says otherwise? I mean, anything.
that's a good question. I
I haven't
mean,
seen anything
no,
myself. I haven't seen anything. And I know everyone's like, oh yeah, inflation's over with. I'm like, not, but
yeah,
not the charts. I can't
no, no,
find
no,
any data disagreeing with it. And
no.
I've
Maybe,
looked. I
yeah.
mean, it's only narratives. There's no real chart setup where I'm like, wow, this could. It, to me, what it looks like a big fat inflationary potential recession that
Yeah,
that could come. Maybe it depends.
yeah.
If the markets were to roll over, the financial markets were to have problems and break down, or if the Nasdaq were to break. But what I mean, have you seen anything that negates what you're seeing in all these different charts that you'd be like, wow, that's the only thing that I can really see. I don't even see it in the housing market. Like I don't see it anywhere.
No, I mean, short term, yes, you could get some big deflation, but long term, I, I can't see it.
Yeah.
Maybe there are some guys that are better than me, at charting, but I just can't see it long term looking 10, 15 years out. I just can't see it. Short term over a year, yes, we can have a COVID like
Mm-hmm.
crash, obviously, but that would ultimately just put more fuel to the fire later on.
Yep.
So yeah, I just can't see it.
Well, that's good. I'm glad that we agree on the longer
On that,
term view.
yeah.
Now, here's something. I'll just get your opinions here and how to play this a little bit. But would you try to time the short term? I mean, is that something that people should try to do? Is try to time a entry point and say, oh, we could have a recession. I'm going to wait to purchase my uranium shares, or I'm going to wait and purchase my natural gas after this recession. When looking at these charts, what's your take on that? If someone were to kind of ask that question.
Then I would say that yes, of course, obviously we can have a big crash in uranium. Let's say we get a 50% drop right here, right now, and you are, as a person, you are worried about that. That's totally fine, and totally, it could happen. Don't get me wrong. But I will say this, that the charts are pointing to higher uranium prices overall for the long term. So you need to have some foot in the game, right? Let's say you want to invest and you have seen the breakout. Maybe you don't use the entire 100% money that you have allocated to uranium. Maybe you just go in like 60%, let's say. So if you fear a big drop, then you at least you can say, yes, we had a 50% drop. I love it. I can buy with the remaining 40%, and you can have a big discount to those shares. So it's kind of a hedge, right? You can hedge yourself
Mm-hmm.
with the amount with a bag of money that you can buy if you were to see that big drop. But to time it with 100% of your allocation, trying to say, oh, it will come, and then you could do it. If you can, then you're very lucky. And but yeah, you shouldn't count on it. That's very difficult to do.
Yeah,
Even the best
and
traders and investors, they can't time the bottom. They can get close to the bottom within 10, 20, 30%, but still that's a very good entry if you have a long-term outlook. So yeah.
and given these charts and the way that a lot of them look, have you added to your positions at all, or are you just kind of riding and waiting?
I think I bought, like, if we're talking about uranium, I think 80% of my position is from the late 2020s. And then I have added for like 20%, during the past 6 months or so. So even those where I have added, I'm still underwater with those, but to me, it doesn't matter in the long term. So at that
I
point, they
got
were
you.
great entries and then they went lower. It can happen, but to me, it doesn't matter. I had a plan and I'm sticking to that plan. So yeah.
Okay. Yeah, I was just curious because
Yeah.
I've been adding along the way. Um, I've been sprinkling my uranium, oil, gas, platinum, all these different sectors. When
Yeah.
I see them down, I just kind of add into them. So Yeah. So anything else that you want to add?
No, I mean just one thing. I mean, if you approach uranium, you should be bullish on the gold and silver miners as well, because the relation between those two are just it's almost one to one. If you were to do a chart of those two, where you take the GDX divided by gold, and then uranium divided by uranium spot price, you will see the correlation just to be perfect. You can find that on
What do
my
you
Twitter page. Yeah.
what do you think has more potential for this commodity bull market, the gold and silver mining companies or the uranium companies?
Uh, I don't know, to be honest. I think
Flip the
the
coin.
uranium miners has taken they've already gained a lot, for the past 2 years, and then we have been in this consolidation. So I think actually maybe gold and silver miners if you can find some really good entries there in some of the smaller ones, and when golds get going and silver gets going, they will do insanely good. You can get 100 bagger easily if you can hold on to that move. But and just that, like we talked about, everyone is bearish gold and silver miners right now. Everyone. So yeah, this is a good time to be looking into that if you were to get your initial purchase.
Yeah, and it's tough to project what market conditions come because if we have an inflation like maybe we're thinking we could potentially have, there could be a run on gold and silver and platinum and all these different precious metals where money just turns, rotates at it, and just eats up all the physical metal, and then I don't know what the price does.
No,
But
exactly.
you could
Then yeah,
you could say the same for uranium too. So it's tough to say. I don't know.
yeah,
That's why
true,
I'm in
true.
all of
Yeah,
them.
exactly. I like both sectors with a bit more bias to uranium, but yeah, they are both very good. This is
Mhm.
the SILJ divided by silver, by the way. So you can see the ratio here. We are exactly at the lower trend line. So if you
Dude,
were to
that's
buy,
crazy. That's crazy. That's
this is
freaking
it.
crazy. Look at how cheap
This,
that is.
yeah.
God,
So again,
such a
I'm
good
not
entry
calling the low
point.
here, but I'm just saying that this would be, from a technical point of view, an amazing place to buy silver miners, because this
Well,
suggests that this is the low. So yeah,
so I mean, if you were to unwind all this, so the reason I'm getting a little bit ridiculous here is because this is a massive leverage trade. So you basically have the Dow Jones, you've got gold way cheap to Dow. Then you've got, if I move gold over here, silver's cheap to gold. Then you move it over here, you've got the silver juniors like off the chart cheap. If
exactly.
we get in a weird scenario, these can all reverse to an overvaluation where SILJ just blows by everything.
Yeah,
So if that were to happen, even if it takes a decade for it to happen, the valuation change between SILJ and all these other assets is just ludicrous.
it is
And,
for sure.
and same with uranium and same with all these other ones that we're talking about. It's unfathomable. I don't know if the people understand how ridiculously cheap these assets are. It's just off the page cheap.
Yeah,
It's yeah.
yeah, it really is.
Mhm.
So yeah, as you said, if we were to get a move to silver to, like, let's call the 500 the big number,
Yep.
I mean,
Yep.
that's a 10x. I mean, and if you can get the juniors and so on in silver, they can do 10x of that easily, easily.
Yep.
So
It'd be a 100 bagger potential
yeah, exactly.
if you get the correct one
Yeah,
and
yeah, yeah. But even if you get a 50, I mean, I'll take it any day of the week, so it doesn't matter. Or even 20. I
yeah.
mean, it's just. But the potential here to really grow your capital, or yeah, your net worth, is just, you have a great opportunity here in my view. But it takes a lot
But
of, yeah, go ahead.
I was going to say, but you're going to have to live through some volatility. This isn't going to be easy.
No, it's not. Just like in uranium, we had a 400% move from the 2020 to 2021. Amazing, right? And then we had a 50% drop.
Mhm.
That's a big drop for many people to take if they have made, let's say they invested 100K, right? And all of a sudden they are at like, let's call it 500,000. And then to see that drop back to 250,000, many people can't handle that at all. They will
But
be scared out. So
I think what happened to a lot of the retail sector is they jumped in when it was going up in 2021 and they're 30-40% down in some
yes,
of their stocks.
yeah,
And
even
they're
more.
like, they don't want to ride it anymore. But
No,
what we're looking at is that the valuation is so ridiculously cheap, guys, that if the interest, basically we're painting a picture of an inflationary environment. And if this environment does come and materialize, these assets are going to be nowhere near where they're at today.
Yeah.
And if people were to sell out, they were like, the best thing they could have, when looking back, I think that what they're going to say is, even though I bought it in 2021, that would still be a ridiculous entry point for what potentially could come in the next decade.
Exactly. Yep. Exactly.
Yep.
And I think as a final statement, Andy, this is the GDX juniors to gold. And looking back in 2011, right, gold was at the all-time high where we are right now, more or less, right, give or take. But anyways, and you can just see how much more upside, even if gold were to do nothing right now, you still have a 5x, in the GDX juniors to get to that level where we were. And if gold's going higher to like 4,000, 5,000, whatever, I mean,
yeah, I can't imagine if we had a 1970s type move in gold.
No, exactly.
Because then these things would just, I don't even know where they'd go.
No, they will go very high for sure. They'll be but then again, almost no people will be able to sit through that. A few will. Yeah.
I'm gonna sit through it. I don't care.
Yeah. I'm looking at the
yeah. I'll do everything in my power to make, just to have some money sit through it. Yes, even if I were to take some profits along the way.
True.
I'm gonna have some money in it. It's fine.
Yeah, me too. I'll try to at least, but it will be difficult for even the best traders or investors in the world. They will take profit on the way up. They will, because they have to risk manage and so on. But yeah, I think it's going to be fun and very what's it called now?
I think it's going to be difficult.
Exactly, difficult. Yeah,
for the majority of people, because they're going to see their accounts go up, and they're going to be like, I've never experienced this type of move, and then they'll either sell out at like 100 or 200% gain or a few 100% gain, and then not ride the whole thing.
Yeah, exactly.
Huge. I don't know. I think that'll be a mistake, but I think a lot of people will sell out too early.
Yeah,
which is fine.
Yeah. And a lot of people will sell, just like they have done it maybe in the past half year in uranium. They have sold out because nothing is happening. I'm down 50% of my investment. I will get out. Many people will do that, the exact inverse of what you should be doing, which is actually to be buying more. So
yeah.
So again, go against the crowd. So yeah.
Okay. Well, anything else? I mean, that's all I've got.
Yeah, it was a long video, but I think we covered something great. I think the charts looks really good, and hopefully, if we get a drop in the Nasdaq, it will not drag us down too much. But it looks awesome. It really does. It really did.
All right, Casper. So thanks for coming on. And if people were to reach out to you, how do they contact you? How do they find you?
You can find me on Twitter at UseLinkINV. Same for YouTube, UseLinkINV. And on YouTube, I try to do a daily recap, but sometimes I don't do it because, if it's dull market, I will not bother you with your time. So, but I will post there like 4 times a week, 3 times a week, more or less. So yeah, subscribe there, and hopefully you will find a trade or two or an investment or two. So yeah.
All right, guys, you made it to the end. Thumb up. Put down Casper Rocks in the comment section, and we'll catch you guys later.
Yeah. Cheers.